All right, uranium heads. Yeah, that didn't sound right. How's it going, everybody? Anywho, I have four interviews from the WNA here today, and one summary report from Ben Finegold, which I thought was very good. Quickly summarized everything, but basically three analysts and two companies. I have one producer and one explorer. Curious what they were doing there, actually. So I'll ask them, but I'll also be asking about the sentiment and why the stocks are still crashing. Yeah, so stocks, sentiment, I have supply, demand, inventories, contracting, and probably some other stuff. But this is my best effort to catch up on the WNA since I missed it this year due to completely foreseen circumstances, actually. But I'm not going to explain that. This is the next best thing, or so I'm hoping. So here's Justin Huhn first, then Yellow Bull, then Ben Finegold's report, then Paul Goranson of Encore Energy, and then James Sykes of Baselode Energy. Here's that. All right, Justin, thank you for calling in last minute, kind of on the back of the WNA conference. Talk to me, give me the summary. What am I missing out on? What was being talked about? Just tell me everything.
Sure, it's my pleasure, Antonio, and apologies for the poor production value here from the hotel room in London, but it's what I could pull off. Um, the big story of the conference this year is the demand story, the growth of nuclear. It's the underpinning of the entire conference. Most of the conference sessions are around that theme. So, how will supply respond to the growth targets? Not only the growth that's actually happening, especially in the East, China and India, but the targets that are being proffered in the West, the 20-something countries that signed the pledge to triple nuclear. How not only how will the industry come together to actually accomplish those goals, but how will the fuel cycle respond and be able to fulfill the demand side,
Hmm.
assuming we even get halfway there to these nuclear growth goals. So the underpinning of the growth story, the growth of nuclear, the growth of electrification, the growth of AI and data centers, the demand, all of that is happening. And that's really kind of the underpinning of the entire thesis. It was very, very positive, very effervescent, the mood in the room. This was the highest attended WNA symposium in their history. It was absolutely full. They had to close registration. Everybody in the industry was here. It was an absolute whirlwind of meetings, and it's been a full-on 3 days. It's been extremely, extremely valuable. I did a very long video last night for members trying to summarize my takeaways from the conference, which were extremely enlightening. So I'll do what I can to fill you and your audience in on some of those elements as well.
How can that be? How can that be the most attended conference? Is what I'm thinking because I'm looking at my portfolio, I'm looking at these charts, and it sucks and it hurts to see those prices like that. How is there a disconnect of sentiment of sorts? Like, how is the sentiment on the floor? Like, I understand there's a lot of people, but are people as pissed off as people online are?
Oh no, I mean, the juxtaposition was absolutely shocking. So during the conference, I was largely present to the conference and the conversations I was finding myself in. And we're talking about not only just the growth of nuclear, what's happening in China, how the U.S. is likely to announce new builds, just very bullish things, elements for the nuclear sector. But also we're talking about inventories. We're talking about demand or lack thereof in the physical market. We're talking about the dynamics of the physical market, what we're expecting for the end of the year and for the years going forward. All of these elements are unbelievably positive, unbelievably positive. And then as I take a break from a meeting and I go on Twitter, it is, I mean, literally night and day, literally night and day. And to some extent, it's understandable. The equities are getting absolutely trashed here. There's a lot of technical chart damage here. And it doesn't make sense with the underlying fundamentals, right? Which is very, very frustrating for investors, especially for those who are not able to either attend conferences like this or have access to the information from conferences like this. So, an example I can give you is our existing membership is extremely solid, extremely solid. I'm actually very proud of the work that we've done, the people that are with us, and they've continued to stay with us, which is I suppose telling. Um, these folks are long-term investors, and they are here for the long term. They understand the thesis, and the price action on the screen does not necessarily become the narrative for them. For anybody who isn't steeped in what is going on in the fuel cycle, it's a much more frustrating experience because you might be refreshing Numerico multiple times a day and watching spot go up or down a couple of dollars here and there. And that oftentimes is driven by 0 pounds traded. It is literally just a single negotiation of a single trade and the bid and ask going up and down. It might even be 50,000 pounds. I mean, it's utterly irrelevant when it comes to the overall procurement of nuclear fuel by nuclear utilities. But there's no denying that the chart damage is real. Okay, so that's obvious. That's obvious. And it's been bad for a month and a half. It's been frustrating and boring for longer than that, but it's been bad for the last month and a half. And even the last few days during the conference, we're seeing big washouts. I mean, across markets, but uranium continues to get hit and it's trading below the lows on a relative basis compared to the metal before the bull market even started. And that's actually a really interesting observation. It kind of just hit me from a different angle. That is another theme of conversations in this conference is the bull market hasn't started. And that has nothing to do with equities. So if we look at what has transpired over the past 5 years in the sector, when we're talking about the fuel cycle, we're talking about uranium, we're talking about conversion in UF6, enrichment in EUP, the prices of everything are up 2 to 3x, if not more, right? Uranium bottomed at $18 a pound in 2016, 8 years ago, almost 8 years ago. And it's gone up over $100, pulled back down to 80. All of these moves across the fuel cycle have essentially happened on less than average, or let's say less than replacement rate volume, especially for uranium. We had higher volumes traded in UF6 and EUP conversion and enrichment over the last 24 months, but that largely has had to do with the disruption on Russia and the move towards Western sources of those two products and services. But on the uranium front, we haven't seen a single year of replacement rate contracting. So last year we got close looking at just volume, right? 162 million pounds. Replacement rate arguably was 180. But if we consider that Ukraine and China were about 75% of that volume, that was not a bona fide replacement contract year. So the point I'm making here is we have seen an enormous price response. And if you're going back to the beginning of this bull market, we've seen an equities response. It's been negative during certain periods of time, but generally speaking, we're still seeing the equities largely, the indexes and large caps especially, move from the bottom left to the upper right over that period of time. But the physical market has had a huge price response in that period of time, and we have not yet seen the volume, and we will. So there's reasons that we haven't seen that volume, and we can get into that briefly. I want to try to keep my answers generally short because I don't have a lot of time today with you, unfortunately. But every single lever has been pulled by the utilities to generally avoid the term market. And the reason is because we're in a rising price environment. And when there is a rising price environment, you're going to flex on all the options you have, generally speaking, to buy yourself time in some kind of ill-informed hope that the price is going to stabilize and or fall, and it's not. So that's especially what we've seen in the last, let's say year to date. Last year, Q4 last year, the price doubled, right? Price doubled from August to January. It doubled. That's an insane move for any commodity, let alone a commodity like uranium. Okay, this is a very small market. Everybody that comes to conferences like these, they know each other. It's like a big family. It's super fun, but it's a very, very small industry. It's a small industry. And so when you have something like this happen where the price doubles, it's an unstable environment, not only just because of the price action, but because of other elements like the Russian uranium ban legislation that had passed the House last year, passed the Senate, 6 months after that. Then that is an unstable environment. Utilities will buy time. How do they do that? They flex up on contracts, and that is coming to an end, right? The flex provisions in legacy contracts is slowly coming to an end. Why? We've had mostly carry trades were done in the early 2020s. The flex provisions that were largely bear market elements of contracts, those are basically gone, right? So that's slowly coming to an end. But if you had a partially fixed price contract in the past that you could actually flex up 10 or 20%, you're going to do that because it's way below the current market prices. So that gives them a little bit of an inventory buffer, a little bit of above ground mobile inventory this year. That's almost basically gone. It's just a very, very tight market. But where you can, and if you can, let's say buy spot EUP instead of coming to the term market at $80 floor 120, 130 ceiling, it's very, very high prices compared to what they paid historically, especially the past 15 years. So you're going to do everything you possibly can to avoid stepping up to the table and calling Cameco and saying, hey, I need 5 million pounds delivered 2030, 2035. You're going to do what you can to avoid that phone call until you have to. And that is all in hopes of the market stabilizing and or falling. And it's just not going to happen. The structural elements of this physical market will not allow it to happen. This is not 2007, and this is not going to be a price spike and a crash. Now, that's not to say that we couldn't see some kind of exogenous event that is completely unexpected that sends the price into a spike. But the utilities are basically expecting that we've seen this enormous price move where the price of uranium has quadrupled in the last 8 years, and it's about to come back down just because that's what it does, and it's not. So from January of this year until now, we've gone from a period of, it's almost like the stages of grief, right? And I don't have this off the top of my head, but they go from denial along the road to eventual acceptance. And we're getting into that acceptance phase where conversations are happening. Term contracts are starting to be slowly signed. We've seen about 15 million pounds in the past 6 weeks signed in the term contracting market, which is a slight improvement. We're going to see a lot more in the coming months. And the denial of the pricing environment, January, February, March, then we see dead trading for 6 months, very, very low volumes, both spot and term. And what happened? The spot price stayed stable in the 80s, largely. The term price kept climbing. And the term price climbing is the most important thing that we need to focus on. That is going to continue to move up. We're going to see it move up as the year progresses, and we're going to see it keep moving up next year and beyond. So the structural elements of this market are unbelievably structurally positive. The equities are a absolute pain trade right now. We think that's going to change. We think it's going to change very, very shortly here.
I want to talk about all these things actually, although briefly. So demand, supply, inventory, and contracting is what I have on my list here to talk about, Justin. But just to go back to the equities here for a second, was that even a topic at this? I know this is not an investor conference overall; it's a nuclear conference. But was that a topic? I know a couple of the issuers are there. Are people talking about it? Someone walking up to you and asking, "Hey, Justin, what the heck?" Is someone doing that?
It's only a topic amongst the investing contingent that was at this conference, because this conference is attended by largely industry folks, people that work in the fuel cycle, nuclear operators, nuclear regulatory representatives, sovereign representatives. But there was an investing contingent. The investors basically are, they're all fatigued by the price action this year. But what are people doing now? People are getting longer. Shorts are being covered. The funds are raising cash. Institutional interest is coming back. There's a lot of large institutional players that felt like they missed the opportunity. They missed the trade. If it was last summer, they didn't get in. They saw what happened from September to January. Now we've seen, in some cases, an utter reversal of that price move. Largely, most of the indexes are still making higher lows from last summer, but some of the equities are down from last summer. It's unbelievable. It's absolutely unbelievable what has happened. This is a very, very small market. What are investors doing right now? I've talked to during this conference. These are contacts that I generally have conversations with relatively frequently. They're going to remain anonymous for this interview, but very, very intelligent people who are usually right. Okay, you probably know who I'm talking about. There's a few of these people in this space. They have spent 20+ hours on uranium. They manage a lot of money. They are not short. They're getting longer, they're raising money, institutional interest is actually growing, and they're putting more money to work going long right now in an expectation of a move that's coming, that we believe is coming. That's not to say that I'm calling an absolute bottom here, but I personally have put a lot of money to work during the month of August and yesterday and the day before. So that's just me personally. We'll see how that goes, but I have a lot of confidence in what's going to happen in the physical market in the coming weeks, let alone the coming months. So as far as what has caused some of this price action, that's a question that everybody's concerned about, right? Because you see all the fundamental factors, you see the term price continue to rise, you hear people like myself, Mike Alkin, some of the other folks that you interview, pounding the table on the overall long-term fundamentals, and they're saying, well, that doesn't really matter. I'm seeing my net worth disappear. So what the hell, right? So What has actually happened? There's a few things that have happened. We've had overall broad macro factors that affected us negatively, right? So we had the 3-day period with the yen carry unwind that happened about 6 weeks ago. And that period affected us pretty substantially along with every other market. So we had a lot of funds that have baskets of themes, right? So you have a large fund that has a thematic basket, whether that's uranium has actually been pulled into some of these tech and AI baskets by these funds. It's been pulled into clean energy investment baskets by some of these funds. A medium to large size fund with a small position for them in the uranium space that liquidates shares will absolutely tank this market, even if it's only a day or two. Then you see margin calls, you see stop losses get hit, you see retail panicking and expressing absolute frustration on Twitter, major capitulation. Okay. Look, this is nothing new to me. This is something I've seen many times since I've been following this sector. This particular moment in time might be the worst sentiment I've seen since following the uranium space. It just might be. People are very frustrated and tired of this trade, and I don't blame them. But every time that this happens, that's a capitulation low. And that's really not the time you want to be selling. And it takes a lot of experience in the investing world to act against your emotions. So I do know, based on conversations with contacts at this conference, there were a number of funds that the industry kind of considers tourist funds, right? These are funds that know, you and I know 1,000 times more about the uranium space than these funds. Okay, these people are managing hundreds of millions, if not billions of dollars, and they don't know what conversion is. Like, just to give you an example, right? They know absolutely nothing about this trade. They call up the people that do know something about this trade and they say, hey, I want some exposure to clean energy. What do you got? All right. Then they come in and they buy SPUT and they buy URA or they buy Cameco or they buy NextGen, whatever it is. Some of these tourist funds have been liquidating shares in the last number of weeks. That is part of what is happening here. And this sector is so small that a single large fund with a small allocation here dripping out shares over the course of days or sometimes weeks can absolutely and did cause what we've just witnessed. So to the extent that, and I know this can sometimes be a dangerous thing to say, but the market is wrong. And the people that are selling here don't really understand the story that's going in the background. And you might say, Justin, that doesn't matter. My stocks are going down and they're going down. I don't care the reason they're going down and they shouldn't be. You know what? I understand that. But you cannot be in a volatile sector and not expect volatility to the upside and the downside. Has it been disappointing to see that price action? 100%. Is it an opportunity for anybody that truly understands what's about to happen? 1,000%. The other thing that some of the conversations with investors ended up talking about was even coming from the smartest people in the space on the investing side, we didn't expect to see these prices. Didn't expect to see Cameco at $35, $36 again. Did not expect that to happen this year. So that is one reason why those that have cash are treating this as an opportunistic event.
Mm. You know, I don't understand the name calling and the overall abuse that's happening online. I understand it's emotionally driven though, and I understand that people are suffering from it. I also understand the frustration where people say, "Oh, the goalpost is being moved." Like maybe some people went in with the expectation of, "Oh, this is a 2-year thing," but it wasn't, and maybe there wasn't a blow off top like a lot expected. Do you feel like that goalpost is moving, or is it being deleted? Like, can we even still have that kind of a move in the equities? And if we can, is that goalpost being moved?
The goalposts are always moving. When the information changes, you have to change your judgment of a situation. It's absolutely ridiculous to stick to a statement I made, let's say 2 or 3 or even 4 years ago and say, this is still going to happen when the information changes. Look at what has panned out in the past 2 years. Russian uranium is banned in the United States starting in 2028. Okay, that has happened. The United States is life extending every single nuclear reactor. China is building 10 plus reactors every single year. They've been buying hand over fist over the last 24 months, and they're going to keep doing that. When the information changes, you have to change your judgment.
Mm,
The goalposts are always moving. I don't have a crystal ball. I don't know how long this market is going to last. If you ask me right now, how long will we be in a bull market for uranium? I'm going to tell you somewhere between 3 and 10 years. I have no idea. We're going to have sustained, we need to have sustained higher prices for supply to respond. And all of the supply that is attempting to respond right now is having problems. All of it. All of
mm,
it. And it's just not going to respond anywhere remotely close to how anybody is modeling giving most of these greenfield and brownfield development projects the benefit of the doubt on their timeframes. It's just not going to happen, Antonio. So how long do we have? I don't know. I don't know. I'm not going to plant my flag on that. It was so much more speculative and seemingly clear at the same time years ago because we were starting to see a price response, and all we really had was an analog of the previous bull market. So much of what is paid out hadn't panned out yet. And now have a full-on nuclear renaissance. We have actual electricity demand growing in the West. That wasn't happening when this trade started. That wasn't happening. This is new. This is in the last 24 months that we have these major changes in demand modeling for electricity. So all of these things influence the mid and long-term picture for this investment. So I don't know how long it's going to last. All I know is that we have yet to see the adequate volumes being traded in the term market, and that will happen because there's no other option once all of those other options are gone. So once you're done flexing up and you don't have any more deliveries on term legacy contracts to flex up on, you can't do it anymore. Once the above ground mobile inventories are liquidated, you can't do it anymore. Largely, Russia has been a big source of spot EUP. Russia's short uranium. The French are short uranium. The Chinese are buying all of the uranium. Every single pound out of Kazakhstan that the West is not going to buy, Russia and China are going to buy.
mm,
They're going to buy it.
mm,
It's my confidence has never been higher in what's about to happen in the physical market. And I'm not saying tomorrow. I'm not saying necessarily even next week. I think we're going to see a move, a seasonal move. And that's pretty clear after attending this conference that what we're going to see towards the end of the year, or between now and the end of the year, I should say. How quickly or how soon we see huge demand come into the term market is a harder question to answer, but we do know that it will happen. We do know that over, let's say, a 3 to 5 year period, we're going to see utilities actually have a situation where some of them are not going to receive the material that they need. We're going to see a moment in time where multiple buyers are going to be fighting over limited supply. That is going to happen. How soon that happens is a harder question to answer. But the whole enchilada, the real event that we've all invested into the sector from the beginning, the term contracting cycle, it hasn't even started yet, Antonio. And that's extremely constructive considering the price action leading up to this moment in time.
Do you think there could be more pain ahead? Like, could we see a mature uranium cycle from a spot and a long-term perspective and contracting and inventories depleting and still not see a move in the equities? Like, is that conceivable to you?
I mean, look, anything's possible, but that's not really what's happened, right? Most of the time when the equities are underperforming, it's when spot is doing nothing. And that's why, that's the price that everybody watches because it's the price that's reported on most frequently. Even if that reporting is inaccurate, let's say, right?
Mm,
You're seeing the price move up or down multiple dollars and 0 pounds traded. That's a whole nother discussion. This is a very controversial topic within the industry. The price reporting benefits the utilities, basically. To put it simply, it benefits the utilities. And I don't have the time today to get into it, but investors watch the spot price because that's the only thing that's updated on a daily basis.
mm,
So when spot is going flat or sideways, like look at just what happened. Because Kazatomprom announced that they were revising down their 2025 guidance by a substantial margin. The equities and the physical price responded for a single day and then reverted. When that happened, retail investors that don't understand anything about the fundamentals look at that and they say, I have something wrong here. I'm out because the spot price is moving down after Kazatomprom announced a revision down of their production for next year. So the spot price doesn't respond usually in a single day to something like that. It responds to physical demand and supply.
mm.
And usually it's very, very low volume. So it's historically unlikely for us to see big moves in the physical market and no moves in the equities.
And volatility remains the name of the game. And I think I think I've learned that the hard way. So I'll stop complaining about the equities now. Let's talk about what you're hearing about contracting, though. Floors, ceilings, are contracts even being discussed? Are the utilities the prettiest girl in the conference room, or like what are you seeing?
Oh, the contracting discussions are definitely picking up. I would say the most constructive element of these discussions is that the price is firm. So even though we've seen very low volume trading this year, we haven't seen the price fall. We've seen the opposite happen. The price of the long-term contracting moving up during a low volume year is probably the most bullish thing I can possibly imagine.
Hmm.
So when you see demand step away and the price rises, look, this is not complicated. This is commodities investing 101, supply and demand. Okay. Price doesn't rise in an oversupplied market. So the real concern about any commodity investment, if you're long, is unforeseen sources of supply or supply substantially breaching demand and causing the price to fall, right? That's just the basics. That's not happening. What is happening is that the term price continues to rise. So what we're hearing is that floors, generally speaking, are in the 80s. Market reference contracts are almost entirely market reference, if not entirely. The only contracts that are not 100% market reference are usually from developing companies that don't have quite as much leverage as the actual producers. Producers are selling 80 floors, 120, 130. I've even heard of higher ceilings. I'm hearing that contracts are starting to enter into discussions where the ceilings are disappearing. The producers are negotiating for no ceilings. Usually with no ceilings, the floors have to drop a little bit, but no ceilings whatsoever. There's even a utility, possibly two, that are entering into discussion with producers who are entertaining the idea of no floors, no ceilings. Nobody's going to sign away their whole book on a producer or a utility for no floors, no ceilings. But that's wild, considering that we're just a few years coming off of at least partially priced contracts. Everyone on the production side wants market exposure, and they're getting it. It's a seller's market. We're going to be seeing some RFPs hit very soon. I'm not going to say any more about that. We just have a very, very undersupplied market, and it's not going to take a lot of demand to move it. And the demand is about to come in, and the term contracting market is definitely heating up, and we're going to see a lot more pounds signed as the year finishes out in the next 4 months.
Mhm. So, from a demand perspective, you're expecting the second half of this year or the last quarter of this year to be different than the previous three.
Oh, 100%. 100%. We see a lot of parallels to last year.
Hmm. Is there any talk about supply response though? I suppose you talk to some of the producers. I have Paul Goranson as well here to talk to, but what is the discussion being about on the supply response side? Are we going to see enough production come in? What are we seeing coming in now?
No,
Hmm.
there's not going to be enough production. Not for many years. The market's not going to come close to balancing until we have all of the big projects producing. And everybody knows that. Utilities know that too. U.S. utilities are starting to look further out into the future, trying to secure pounds much further out, going to the mid to late 2030s. It's basically understood across the industry that we have an undersupplied market, and it's going to remain undersupplied for a very long time. So until and unless we've got Arrow, Phoenix, DASA, Kazakh ramp, Uzbek ramp, et cetera, we're not coming close to sufficient supply response. Yeah.
Hmm. Unless, and this is one of my favorite jokes that I've said a billion times, so nobody's ever laughing at it besides me and my wife. But inventory, unless there's £1 billion of uranium somewhere in inventory, then we're in trouble. But what about inventory? I mean, is there £1 billion? Are people talking about inventory? Is China the 600 million pound gorilla? Were they on the conference floor? Did you talk to someone? What are you seeing on the inventory side?
China is going to be a net buyer out to the end of the decade and possibly beyond. China, these inventories are largely not commercial inventories. These are not necessarily even pounds available to the Chinese companies that trade. Largely, that's CGN. Look, China arguably has the easiest access to Russian EUP, and they are the biggest buyer. They have been the biggest buyer. They were the biggest buyer at $25. They were the biggest buyer at $35. They were the biggest buyer at $50, and the biggest buyer at $80. China is an enormous, enormous growth story. And this is not just pie in the sky numbers. These are numbers that they're actually meeting. They're actually meeting with construction starts on nuclear power projects. They're going to hit 150 gigawatt goal by 2035. That means they're going to consume 500 million pounds in the next 10 years. If they continue that pace and hit 200 gigawatts by 2040, they're going to consume over 1 billion pounds between now and 2040, just in reactor burnout. So what you want to see in a bull market for any commodity, and specifically in this case for uranium, you want to see sovereign inventories growing. You want to see utility inventories growing, and you want to see producer inventory shrinking. That is exactly what we're seeing. Exactly what we're seeing. So inventory growth should be something that gives you comfort, not concern. China's inventory is not for sale. China's inventory is not for sale. And the fact that Western utilities this isn't topic number 1, 2, and 3 in their discussions is insane. China, and to some extent Russia, are going to consume all of the available uranium, and they're doing it quickly. And here's why. China thinks in decades, and they can see that there's no supply, no reasonable amount of supply. And we go out 2035 and beyond. Where's the supply? Look at the Kazakhstan's own Kazatomprom's own produced supply graphic, the rainbow colored thing that just does this, right? It goes up and down. Most of their projects are depleted by 2035 to 2040. MacArthur River is going to be done by the late 2030s. Cigar phase 1 is done in the next 3 years. Phase 2, probably late 2030s. Rossing is going to be done. Langer Heinrich is going to be done, pushing out into 2040. They can see that there's no reasonable expected supply late decade. So that's where we're at. They're going to buy as much as they possibly can. And you should not be concerned about their inventories whatsoever.
All right, Mart, you're calling in from London right now. I mean, the conference is, I suppose, almost finished at this point, but you've been there all the days. What did you think? What are you seeing? What am I missing out? What are your biggest takeaways?
Well, it's been a great conference so far, and my apologies for the audio quality. I didn't really prepare for doing any interviews, but I have spoken to a lot of people, and the conference has been extraordinary. It has been completely sold out, hundreds upon hundreds of people, and there were going to be hundreds upon hundreds of more if they didn't close it off over the past few weeks. And I think that is indicative of the way that both uranium, but mostly also nuclear power, are becoming more and more popular as subjects that people discuss, not just in our niche market where we see the uranium companies and nuclear power companies, but also for financials. So what I mean by that is that this year, even more so than last year, from what I've seen, were more financial related entities, more hedge funds, more family offices, more entities that have taken an interest in this space. And something that I will add to that as well is I've spoken with an analyst, and we were discussing the fact that even though the long-term price has been ticking up consistently, the moment that you and I are talking, we've seen uranium equities do horribly. I think that's fair to say. But that is not reflective of reality whatsoever. When I spoke to this particular analyst who has done thousands upon thousands of hours of research, he noted that he couldn't believe that people that either missed the first part of the trade or just didn't do proper due diligence to get in a few years ago were getting these prices again. The market usually doesn't provide opportunities to people who are late to the trade, but right now we are seeing prices that I personally believe and he personally believed we would not be seeing anymore. But such is the fickleness of this uranium market that it rides the wave down together with the broad equities market, together with some of these technologically related equities as well. But as I just noted as well, this is just not reflective of reality whatsoever. When you look at the way that the term price is heading, it is firmly upwards and to the right if you plot it on a chart. And even though support price has pulled back a little bit, I would argue, I would be very, very surprised if we see a lot more downside on spot as well. So with physical holding and the uranium equities being slaughtered over more macro related headwinds than actually uranium market related events that are causing this sell off. I am very confident. I completely understand that there is a lot of frustration out there, but I have tried my very best to have a lot of insightful conversations with people also on the bear case, also checking in as to where I could be wrong. Is the market looking at this in the right way? Is the market right on the way that these equities should be selling off? Try as I might, I've not been able to find a way where I should be selling my uranium equities and running out the door. It has been the conversation I've been having have been fueling the even more so the confidence that I've already had, but also adding a lot of insights that this conference is just such a good place for. And that's what I've been reporting on the Codex as well. With I published a 18 page report yesterday, which was very insightful, but there is so much more to discuss because there's so much happening in the market right now. And the short conclusion for people listening right now who are understandably sick and tired of uranium equities continuing to go down, there is nothing from a fundamental point of view to be worried about, and there is a lot from a fundamental point of view to be excited about.
So no one walked up to you and was like, Mart, I'm capitulating. I'm done. How was the investor sentiment? I suppose you spoke to a couple of investor sentiment. You're the famous guy. People come up to shake your hand. How's the sentiment?
I'm not as famous as you may think. I like to listen a lot and talk to a lot of people, but it's honestly, investor sentiment is absolutely horrible. Like, as you know, I do my own sentiment modeling as well, and we are currently sitting at 5. For the people that are not aware of my sentiment modeling, I do that every single newsletter, which I publish every 2 weeks, and I utilize a variety of different ways to then gauge that sentiment, not just social media, but conversation I'm having as well as general media and just news flow and the way that the feed is developing. And I then extrapolate the data and give it a mark, 1 towards 100, and then for every 10 intervals, what you're basically seeing is that you get different ways that people are looking at the market. For right now, we're at 5, which means that we are firmly in that depression level, meaning that it is being dragged through the mud and it's been stomped down, Antonio. It's the worst that I've seen so far, even with physical holding up relatively well. Meanwhile, as an additional feature for this particular report that I just mentioned, I also got sentiment for analysts and for other associated parties at the WNA. And what we've seen is that the sentiment discrepancy is incredible. It is ridiculous. It is the way that I have gauged the sentiment here. It has put me at 75 right now. The sentiment for the WNA, for the analysts, for the people associated with the trade, it is a 75, which for the people that are looking for this modeling, that puts it firmly in the middle of confidence. And basically what I mean by that is that people here, they are confident that this play is going to play out. They are confident that we're going to see a massive contracting cycle. And they are confident that there is not a massive wave of new supply coming online that's going to gut punch this thesis. I realize that they are watching the fundamentals more perhaps than some of the retail investors who are watching their equities go down day after day. But I am very confident in saying, and like I'm also right at that 75 level with that confidence. And I'm confident in saying that the market for uranium equities, the price action, it's wrong, doesn't reflect the thesis. And people listening now thinking, okay, but like, how can the market be wrong? Like, price action is price action. And while I do understand that, I think that we are due for a very strong turnaround because even with this recent price action being so incredibly painful, like fundamentals will not be denied in due course. And given what I've been hearing with regards to more activity picking up in the second half of this year and next year, I am very confident. I am frustrated with uranium price action with regard to the underlying equities, but I remain very confident.
Did you talk to any of the issuers, any of the CEOs of uranium explorers, developers, producers that were there? How were they looking? They looking depressed to you?
they were they were not happy with their share price performance, which is understandable because they are there as well to try to draw up interest for their companies and to return value to shareholders. But I think one of the most interesting things that I got from these CEOs, especially from the later stage developers and the producers, because they have a very good handle on the market. They talk to a lot of utilities, and they were not depressed at all. Sure, they weren't really happy with share price performance, which is understandable, but they were extremely, extremely happy. Why were they happy? Is something I asked them, because why are you happy with the way that the market is developing? But they were happy because the way that they have been negotiating contracts and the way that they have been talking to these utilities, for the first time in years, it has firmly become and is becoming more and more of a seller's market, which means that they are now able to set terms that they have not been able to set before. What I mean by that is that 10 years ago, if you were to go into the market because you wanted to sign a contract to either get some cash flow in to develop a project or get bank financing ready, and they want to see that you have signed an offtake agreement, what you're basically seeing now is that all those bells and whistles, all those flex options, they're almost gone. There are almost no flex options in new contracts, contracts that are being signed with established developers and especially established producers. What they're basically seeing is that we're looking at $80 floors. We're looking at floors at the current term price or slightly below it, with ceilings going into and above $130. That is reflective of a seller's market. So that is why they were happy. They were happy that they can now negotiate terms that are good for the company, good for shareholders after years and years and years of the bear market where the buyers were able to dictate terms. That is no longer the case, and that is, well, not really surprising if you consider the fact that there is a lot more demand out there than there is supply.
What about on the other end of those contracts? Did you manage to speak to any other fuel buyers? I've been trying to get someone on and haven't been successful in that. But what about you? You talk to anybody?
I've spoken to a few people on the other side of the table, if you will. Basically, the sentiment in the room was that it wasn't surprising that utilities stepped back from contracting, because if you're not in the market every single day, like I am and like some of these other analysts are, and you see the price of uranium double in the span of a year after more than a decade of the price being relatively stable, and usually on a general downward trend the last few years, it has been generally up, but nothing in the spiking sense that we've seen last year, or over the last year, especially with spot. So they've stepped back and they have then tried to buy themselves time. And how do they do that? They do that by pulling various levers. So what are some of these levers? Flexing contracts. So what we just discussed, these old legacy contracts. If you sign a contract at, let's say, $50 uranium or $40 uranium, you have a flex option for 20%. You're not going to go out there to sign a new contract. You're going to flex up the most that you can to take more delivery. To add to that, another lever was pulling forward Russian enrichment. Another lever is pulling down existing inventory. Another lever is importing in part Chinese EUP. All those levers, Antonio, can only be pulled a finite number of times. Some of them can only be pulled once. We are rapidly running out of levers, which means that all the time that they've bought themselves to now kind of get used to this elevated price environment, because it's not going anywhere. Price is going up. I'm very confident stating that on the record. What we're seeing right now is that they've become more accustomed to this elevated price environment, if you want to call it that. And they are starting to be more willing to come to the market because they see that it may not be as easy to procure pounds as it has been over the past couple of years, especially over the past decade. So what you're seeing right now is that they are poised to come to the market. The term market activity is expected to increase a lot over the second half of this year. There are already a few RFPs out. There are more RFPs expected. But more importantly than those RFPs, it is expected that we will see a lot more off-market discussions happening between utilities and producers as they look to fill their needs for especially the coming few years, with the current price environment. So what we're seeing right now is that they've become more accustomed to this elevated price environment, because they see that it may not be as easy to procure pounds as it has been over the past couple of years, especially over the past decade. So what you're seeing right now is that they are poised to come to the market. The term market activity is expected to increase a lot over the second half of this year. There are already a few RFPs out. There are more RFPs expected. But more importantly than those RFPs, it is expected that we will see a lot more off-market discussions happening between utilities and producers as they look to fill their needs for especially the coming few years, but also beyond that, because some contracts are also already being signed late into the 2030s for very healthy volumes.
So did any of them look worried though? We always talk about this on Twitter, but utilities panicking. Anybody look worried to you?
Worried, I wouldn't say worried, but that's mostly because it's not their job to worry. And even if they worried, they wouldn't show it, which is very understandable. But they were aware of the fact that at some point I've spoken to someone as well who shall remain unnamed, but he noted he has a very close connection to a lot of US and Western utilities. And basically what he noted is that utilities are coming around to the fact that they will have to start securing supply where they can. But at some point, even if they're willing to pay the right price, if they're not willing to pay a premium, and even or if they're not willing to pay a premium, the supply that they are looking for, even at the quote unquote right price, it may not be there at the time and the place that they want it, which is indicative of a market that is very short on the right amount of supply at the right place at the right time. And a lot of them, they are hopeful that more supply will come online at higher prices, which is something that is inherently true. It's inherently true for every commodity. But something that is definitely worth considering, and I wrote about this in a report as well in far more detail. But if you look at I've noted this before, but the complete lack of intellectual capital with regards to being able to adequately ramp up enough uranium production to fill the gap. Look, it's all nice and well that they're looking forward to next gen and other ramp ups from Kazatomprom after they figure out some of the sulfuric acid issues, which have been discussed a lot. We don't need to get into that, but it is interesting that they're really holding on tight to that. And one of the things that I've heard at the conference as well from pretty direct sources was that some Western utilities, they were not happy with the lack of supply response that we've seen so far, not just from Kazatomprom, but also from a lot of other parts of the supply side. So in the end, like, were they worried? Well, it's not their job to be worried. It's their job to do something to get the supply where they need. So I think that they will get back to their desk after this, after the WNA has concluded today, after they have come back from vacation, after they have taken the summer over the past few months to really, for US utilities in particular, to really look forward to this waiver process. I think that they're aware of the market, that they need to start moving, and that's why I expect a lot more activity in the second half of this year. And something that was also discussed a lot was the fact that the market has a complete lack of shock breakers right now, which means that if we see a few more supply shocks or a few more demand shocks, in the past there was adequate either inventory or mobile supply or secondary supply that could act as something like a shock absorber or some mines that could ramp up further. We don't have that anymore, which means that this market is walking a knife's edge. And I think that if something big happens, which I think it just might be over the coming 6 months, I think we will see a very, very big response from the price of physical. And in response to that, I think we will see a big move in the underlying equities as well. Broad equities market volatility notwithstanding, because we've seen that in such a small market, if things get sold and people get margin calls, we will see some funds that have been long uranium needing to sell their holdings, and they don't have a choice. They need to throw the baby out with the bathwater, even though the baby is very fundamentally backed. It doesn't matter. They're going to sell it to raise liquidity. So that's definitely something that has been spurring this sell-off as well. Some forced selling and just generally bad sentiment has really made this sell-off a lot worse than it actually has to be. And yeah, no, it's I think the right conclusion is that the general consensus is that we will see more activity. We will see that move the price up, because the price has already moved up between, I believe it's 17 and 19%, something like that, on 42.5 million pounds being signed into contracts over the past year, or year to date, I should say. And if that continues, And if we see that sort of price trajectory on that sort of relatively low volume, I think we are in for a lot more upward price action as volume comes back into the term market and to the spot market as well. But please do yourself a favor, just watch term. Spot will figure itself out.
Could we see the spot price going up or even term staying stable and at the same time have even more falling equity prices? Like, could it get any worse from where we're here?
Well, sentiment would indicate no, but look, every single newsletter I focus on making sure that we have the macro picture covered, because even though the thesis is extremely strong as we discussed, and even though the market is wrong on uranium equities, what the market isn't wrong about is the fact that it is pretty I would say uncertain. The market doesn't like uncertainty, and when there's uncertainty from a macro point of view, the market tends to be more volatile, and that takes uranium down with it as well, with a around 50 to 60 million or $1 billion cumulative publicly traded market cap for uranium. A few motivated sellers, due to this broad equity market pressure, they could push the prices down further. So under normal circumstances, I would be very, very confident in calling a bottom right here, even though I'm not a fan of that. I think this sell-off was way overdone. I think sentiment is way overdone to the downside. And I think the fundamentals are way too strong. And I think that we will see plenty of catalysts that will provide an excuse for the equities to go up again. But there is a reason why I've been holding a fairly strong cash position over the past few months. We've used a bit of that over the past few weeks and right now as well. But with such an uncertain macro environment, I think it's always good to keep a healthy cash position, because the thesis may be extremely strong and the equity should reflect that in due course. If in the meantime the S&P 500 takes a 500-point cut in the span of a month or so, it's going to hurt literally everything. And that's something that we need to take into account. I'm not going to sit here and pretend like uranium will be a bastion against the tides of the broad equities market. The physical might be, but the equities, they have shown that they could certainly get hurt, as they have been over the past few weeks, because this sell-off has not had anything to do with uranium sector specific catalyst or news flow.
Unless there's £1 billion of uranium in a shed in Africa. And we joke about this, but have you heard anything about that? Not that, of course, but about inventory. Anybody talking about global above ground inventories? Did you manage to get to some of the Asian buyers or whoever else?
Well, the Asian buyers, especially the Chinese, they've been very motivated, and having spoken to several of them, having spoken to CNNC and CGN, several other Chinese parties here, they have been very, very motivated to get more supply. So even though they've been growing their inventory to what some people will call mind-boggling numbers, they keep growing. They will be net buyers into for some time. Why will they be net buyers? Because they are building 8 to 10 reactors a year, and their multi-decade view on energy security pretty much motivates them to make sure that they will see enough pounds being purchased for the new reactors, and to make sure that their strategic inventory is adequate. So yes, there are a lot of pounds out there, but that is not mobile inventory whatsoever. And Antonio, if there was a £1 billion check in the desert somewhere in Africa, or just a lot of mobile inventory in a less obscure place, more available or more readily available to utilities and to anyone else who wants to buy a few pounds of uranium, we would not be seeing price rise on relatively low volume the way that we have seen. We would not have seen these price rises on this volume, simply because if there was all this inventory out there, and if it would have been mobile and easily accessible, they would be buying that. They wouldn't be allowing producers to set the terms that they're setting. It is a seller's market for a reason. So no, I'm not hearing anything about such a shack. And if there was adequate secondary supply, it would be visible enough that you and I could be discussing this right now as maybe not a bear case, but certainly something to watch that could keep the price down. But price, I'm not seeing it.
I know we have to run in a couple of minutes here, Mart. I'll let you do that. Last question from your perspective, between between the sentiment that's kind of plummeting online, and then the other stuff, demand growth, supply deficits, inventories depleting, what would you say was kind of the main topic? What was discussed the most about?
I would say supply was discussed a lot, especially in the light of Kazatomprom announcing that they will be revising down production, that they will be, and I think that's the most important thing that people should really, really, really take in very closely. The fact that they are renegotiating and have been renegotiating their subsoil use agreements, I think that's a massive tell. So that was discussed, but demand as well. Like the way that people spoke about the proposed massive rollout of SMRs, but not just that, the way that people spoke about the existing nuclear fleet staying in place, the confidence that they had with regards to them operating those reactors for 80 plus years, where even a few years ago they were maybe cautiously optimistic, but that is at best. And right now they were spitting fire when it comes to, okay, we have so much political, we have so much monetary, we have so much public support on top of all the extra demand from data centers, which should not be underestimated. These nuclear power plants, they will keep running. And if you have that security of supply, or sorry, security of operation, there is very little security of supply, but if you have this security of operation in place the way that they have now, that these utilities have now, they will go out to sign the contracts they need because they're making money hand over fist at the right energy prices. And that means that they will go out to secure supply, because if you have this multi-billion-dollar asset that is in very, very high demand from various entities, from these data centers to just the public in general, you want to make sure that you keep that in operation. So both the supply side as well as the demand side were extensively discussed, and I think I will have a lot to write about on the Codex, and we'll have a lot of people to talk to over the coming few months.
Right. So also, as I said, I spoke to Ben Finegold this week, but we spent too much time talking about Kazatomprom, China, the inventories, and also the stocks, and particularly why we were all wrong to think that they'd be higher at $80 uranium. And that was about an hour long, I believe. So we didn't have any time to talk about the WNA really in depth, or like I wanted to do it here. But I will have my conversation with him out as a separate episode of Transition Money Talks. That's going to be early next week, I believe. He did send me this report, though, which I'll quickly go over. I think his takeaways were very professionally done. And I think they did a good job of glancing kind of the high level important stuff, like the really important stuff in the nuclear space. Although not a lot of talks about the equities. So just pretend I'm more handsome with a better accent and 17 times smarter, and imagine Ben's reading all this to you. And but so the report starts off with a sentence. Can you imagine that reads, quote, "The nuclear industry met in London this week for the annual World Nuclear Symposium, which once again showed record attendance with close to 800 attendees," unquote. So then on from this, well, I really am reading this because that's a lot of people for the nuclear space, but it's not a lot of people. I mean, again, look at a Bitcoin conference or a tech conference or whatever. That's not a lot of people. It is a lot of people. This is a record attendance, so it's a lot of people for the nuclear space. From there on, he goes on to discuss that while the mood was positive, it was very positive across the conference. Again, remember, this is not an investor conference. There is no denying that the industry is facing challenges. That's what he goes on to talk about. And that's not that my portfolio is deep in the red. It's about tripling nuclear capacity by 2050. That doesn't really sound like too high of a probability anymore. Ben mentions that, quote, "Regulation, financing, supply chain management, manufacturing, and technological innovation," unquote, are basically going to be the issues to be holding back that goal of tripling nuclear capacity by 2050. Part of the problem is, of course, the availability of uranium. And as I've discussed with other analysts and even with Cameco's Grant Isaac on the channel countless times. I think it's been a year since I spoke to Grant, by the way. I should get him back on. But so the industry is facing an interesting bottleneck, if you want to call it that, specifically the bottleneck of utilities needing to sign long-term contracts, but also wanting to sign those contracts with producers who can assure them that they will be producing and delivering enough to meet those contracts, right? But how can producers assure them of it if producers themselves have to wait for better contracts in order to ramp up production because of what's happened across, over the last decade plus now, right? Because otherwise they risk hurting their company and potentially, depending on the size of the company, also the overall market. So Jonathan Shavers, who's the director of nuclear fuel at Southern Nuclear, called it the chicken and the egg problem. So we're going to hear from Paul Goranson, by the way, of Encore Energy here later, to see how they're dealing with that. But Ben here in this report suggests that there needs to be better communication between producers and fuel buyers. And apparently both the CEO of Orano and Urenco reiterated that chicken and egg problem on stage on a panel. So again, wish I was there to listen to that panel. But I find that very interesting because to my knowledge, which is almost sub-zero, but this wasn't the case last time during the last bull cycle. There was no chicken and egg problem last time. There was actually too much uranium. Of course, happy to be corrected on that by people who are part of the nuclear fuel cycle and understand this better than I or the guests today. So comments are open to all, of course. Further on, Ben confirms what both Mart and Justin just said, actually, is that the rumors that China wants to crash my portfolio by dumping 600 million pounds of uranium out of their stockpiles on the open market, that was apparently a big part of the discussion, and virtually everyone said that China will be a net buyer for at least the next 2 decades. For balance, though, I do want to make a point here that kind of reiterate what I've asked and said in previous episodes, but you cannot afford to ignore China if you have a dime invested in the commodity space. It doesn't even matter what commodity it is, but definitely uranium, right? I'm happy to get reassurance from Justin and from Mart and from Ben and everyone they talk to, but that doesn't mean I'll just ignore what China is doing from here on out, because they can switch directions much faster than the West does. That's one thing. And I'm by far, I'm not saying that they are or will. I'm simply reminding you that they could, and they should just not be ignored. What they're doing should not be ignored, both on the supply but also on the demand side, even though we have this reassurance today, which is of course very welcome. India was actually a topic of discussion in my conversation with Ben again about an hour that we spoke about it. We didn't talk too much about India, but it was in there, so I'm not going to repeat too much of that right now. Besides that, apparently it's stealthily becoming an important piece of the nuclear puzzle, and that's what Ben found at the WNA as well. That's what he mentions in this report. The conclusion from it all, according to Ben's report, is that, quote, the consensus view was that uranium prices end the year in the high 80s, low 90s for both spot and term, as volumes start to ramp up off subdued levels so far this year, unquote. I need to learn how to read better, I suppose. The report also contains the typical headline news overview, which Ocean Wall publishes, as well as the companies they cover. So I'll put screenshots on the screen right now for anyone who cares. Pause it and read it, but this is not necessarily about the WNA, so I'm not going to go through all the headline news and the companies that they cover in here. And again, before you let the rage consume you, Ben and I talked about why the stocks cannot seem to agree with any of this overall bullishness in the nuclear space, and how much longer the pain could continue, as well as whether there's really a chance that we're right on the thesis but wrong on the stocks, just as what I just discussed with Justin, right? And whether we could even go lower from here. But again, that video is coming out sometime early next week, so I don't want to repeat much of that in here. Let's have a break from listening to my voice here, though, and hear from the companies about what they thought of the WNA Symposium. Starting off with Paul Goranson of Encore Energy. And by the way, none of the guests that you just heard and none of the companies have paid me to do this, okay? This is, I suppose, a free video, you could call it, and there is always a disclaimer on the screen. There is a verbal disclaimer, and there is a disclaimer in the video description, as well as the official paid content button is always active on videos whenever there has been a payment involved. In this one, there has been no payment. I saw some confusion about that last time in the comments, so just wanted to mention that. But let's listen to Mr. Goranson. All right, Paul, you're calling in from the WNA. How's first of all, thank you for doing this in short notice. How's the conference been so far? What are you seeing that I'm missing out by not being there?
Well, you're missing quite a bit. There's a whole lot going on here. I understand that the conference sold out. They had 750 people registered to show up, and they had to turn away over 100 people. That's just showing how much interest there is in nuclear. But my takeaways are revolved around kind of this. There's just a whole upbeat view about nuclear, and last year we talked about clean energy as being the driver for it, but now we're the constant hum around the conference is AI and data centers and fulfilling the demand for all that extra energy we're going to need. And so it's kind of put a lot of a good beat going to it. I think if you think about some of the where it wasn't really addressed directly in the conference, but you could hear it in the hallways talking about, is there going to be enough uranium to support it? Is there going to be conversion? Is there going to be enough enrichment to support this kind of growth when they're talking about tripling the amount of nuclear power we have in the world? And that probably wasn't covered as much as one would think they would. It was just one session. It was a great session, by the way, some great speakers or panel members. But it probably, I think based on what I hear from the folks in the conference, it probably could have used another session or something like that to talk about it. But that being said, it's been very successful. A lot of interest from investment, like funds, large funds. There's quite a few fund managers here. Obviously, there's almost all the nuclear utilities we know about are here. Most of them, the big ones, particularly, and obviously several government agencies and governments are here. It's a very positive vibe, I would say, for the growth in nuclear, and from my perspective at Encore is a growth and strong long-term support for uranium supply.
Is that any different than other years, though? I mean, is because it sounds like, I mean, this is kind of the same thesis, maybe with a little bit of a change there with the data centers, but is it different than what you saw there last year?
No, actually, it's just as upbeat, if not a little bit more. I think what I saw different this time was even more financial interest in nuclear. So if you looked at the roster, you see more people representing funds, et cetera, or banking interest attending than we've had in the past. And I think it's been growing over the last couple of years, and it seems to have increased again this year.
That's interesting. I wouldn't have thought it, actually, because I just recently asked John Ciampaglia about this, and he said it's also increasing on their side, like they're calling them. What about investor sentiment then as a whole? Because the equities sure aren't doing what we don't like them to do. So is investor sentiment any different than last year?
Well, so when you talk about some of the funds are here, they're large funds, so they're like generalist funds are coming in to learn about this new nuclear thing and this uranium thing that everybody keeps talking about. And so, and this, honestly, this is just based on my observation, not necessarily, what I've heard from others, just my observation, my conversations. And it just seems like now you got some folks who are relatively new into the space, trying to understand the investment thesis and understand, the long-term view, a lot of questions about the market and everything else. Some of the comments were is that, where the equities are now, you hear, some talking about it's a time to enter, but they really want to know what they're getting into. So we spent a lot of time educating. Whether that means that we're going to see a lot of purchasing of equities, et cetera, I don't know that for a fact, because they certainly didn't convey that they were going to do that. But it certainly was a higher level of interest, a lot of talk about the term market, how it relates to the spot market, and what we see coming, what we're hearing from long-term utility demand, et cetera. So I think that's why you haven't seen a big hit or a big move on the equity side, is because they really haven't. They're still kind of that these large generalist funds are really trying to get their toes in the water, but they're not sure exactly if the water's the right temperature or not.
And aren't existing investors not asking something among the lines of, Paul, we've heard the thesis so many times, it's working for the spot price, working for the long-term price, not working for my portfolio. What do I do? People asking that question?
No, they haven't actually asked that question. They talk mainly about the disconnect between what we see with the spot and the market and the term price. and the equities. And I tell them that, if you look at it, you go back and look at the broad markets, the broader markets, you see that even though it seems like several of the equities have taken a bigger hit than what the broader markets did, it really showed that there was basically a resetting, or a resetting of the whole investor base basically into a lot of the equities that we talk about every day. And I try to, I think most people understand that there's very little that I'm sure that it's not tied to the overall thesis. I think it's more of the, sometimes last in, first out type of thing. And the fact that the spot, as I was talking to one particular person today, is that if I had to kind of guess what you see is going on is why the equities aren't moving with the spot being where it's at. It's actually starting to move positively again, I understand, or where the term prices move to, is because there's no real catalyst to when the broader market drops off. There's nothing that's making uranium investments different in a portfolio. No catalyst out there that's making it different when you get these big sell-offs that would cause people to, the folks will hold on to it for a longer period, because if the spot was moving up, I'm not sure how much, but it probably would have a dampening effect of the sell-off, but it may or may not control the whole thing. But I basically tell them it's really, the fact is that we're really being hit by the broader market. It's making it hard to get any, what I would say, kind of news out there to get people to pay attention to us when they're all watching red on their screen.
It definitely is. That's where I'm coming from with this. Did you see anyone else who was kind of maybe out of place, or you didn't expect to see that group of people, or like kind of like you're telling me I saw a lot of big funds that weren't there last time? Anybody else that you saw there that you thought, what are they doing here?
No, I really didn't. And that's, I obviously didn't go through the whole delegate list at the last minute, but and by and large, I wasn't, there's quite a few people I didn't know, but I didn't see anything that kind of stood out as being, wow, I better find out who these people are yet. Sure, they were there. I just didn't see them.
What about fuel buyers? Did you speak to any fuel buyers? How's their sentiment?
The fuel buyers, yes, we've talked to several fuel buyers, and they're still very positive. What's more fun is to talk to them about, they're actually, some of the fuel buyers are talking about, their management's already talking about building new capacity, and because of the opportunity it provides. And that's every utility meeting we had here. It was that, except for, one or two of the European ones where they're always doing votes on whether to keep the reactors operating. But for most of the ones that are in the business for the long haul, it's all about growth on generation. And so there's an upbeat, they're upbeat about that, obviously, because it shows longevity and certainty in their, not only their careers, but in their planning. And when we talk to them about potential supply, there's a lot of desire to want to have early discussions and to be at a point where when they're looking to start filling some of that out demand, that they've got a place to go, folks they can go to. I think that the days of public RFPs are pretty much limited these days. And most of the utilities, and this has been my experience, and it's the conversation, the sense of the conversation we had here, is that that you're going to see more of a back and forth between individual counterparties rather than just a broad request for proposals. You may see a few of them, but most of them are almost exclusive negotiations, and which is why when we hear that there's not much activity in the term market, that's because it's not being. Several of the transactions may or may not be occurring, are probably not being publicized because it's not public.
But what about floor or ceiling? Was that a part of the discussion? I know you cannot talk to me about it, you personally, with the company, but what about just overall? Was there talks about, oh, this is the new floor?
Well, let me put it to you this way. If we go back in time to 2 years ago, $40 a pound was considered high by them. And now, having something, when you talk about floors in the high 70s and low 80s, you're not getting like any kind of shocked look out of them. It's okay. And the same thing with talking about ceilings that are in the triple digits, maybe over 120, over $130. Then it gets into, okay, that's good. Let's see how this works out for us. And we did talk about those particular things at the with the counterparties. And I would say 4 years ago, we've been laughed out of the room, but now it's an actually engaging conversation. And it's actually refreshing now to be able to have these conversations without thinking you're going to kill a deal, so to speak.
Did you manage to get to talk to some of the other producers or aspiring producers? Was there a lot of talking about the supply response at all?
Actually, there was, and I think a lot of the talk is that how soon will the supply response occur, and who's going to be the ones doing it, and that time, it's also a matter of timing, right? So we've got big projects that factor into the supply demand modeling. So if you go back to the WNA report from last year, they have a certain base amount of supply coming in, the low, the mid, and the high case. And the question is, is there gonna be enough supply to meet even the low case for additional demand? And why is that a question? Because when you're mining, mining is not a straightforward. You've got to get permits, you got to get land access, you got to secure the equipment, the capital projects, and the people to do it. And I can tell you from firsthand experience, it's not an easy task. It's a lot of work, and in some cases, it's more expensive than one expects. And so the conversations we had is about where do you think this project's going to be at a certain time. And then some of the ones are actually doing things right now. We had some, conversation about progress, et cetera. And by and large, we're going to see a production response, but I'm not sure it's going to be as fast as maybe some of the modeling shows. Simply because it's just, there's a lot of steps that have to go into permitting, engineering, and everything else.
I'm sorry, you mentioned modeling shows, and I was kind of thinking about models for a second there, so I blanked out. What about inventories? Did anybody talk about inventories? I mean, China's inventories are being the people say the 800-pound gorilla, but they're more like the 600 million pound gorilla, allegedly. Anybody talk about inventory there?
Not as much as they have in the past. I think when we talked about China, it was in how what's going on with basically some of those moves recently in the spot market. And it seems like it's happening every 6 months. They come in and try to push material out in the market, but it doesn't look like they're trying to crash it. But I do think they have a lot of sway in the market. But I really do think that they're still looking at their inventories as being critical to supplying their own reactors. And over the long period of time, they don't have a lot in the way of strategic mineral resources in the ground. So they have to rely on the inventories for the short term. And you have to understand also when you get into the Chinese world, the short term is not tomorrow. It's like 10 years out, 10 to 20 years in the future. So they're planning well ahead. And so I think that some of the moves we've seen recently are almost anomalies rather than any issues about being a big risk to the market.
So I'm about to let you go here, Paul, but between the disconnect and discontent with the equities, demand growth, supply deficit, and inventories, what would you say was the main topic? Like, what were people talking about the most?
So from my perspective, keep in mind, I come into this as a producer. It was really about can we deliver on what we say we're going to do? That's the key. Is it's great to have all these platitudes about tripling the amount of nuclear power and the growth and the demand going forward, but can we deliver? Not only on the supply side, but you have to construct and get the reactors operating. And those of us who've got a lot of gray hair, we always worry about what's the one thing we don't know about. And we had a little talking about that as well. What's going to be out there that could be negative that we don't know about yet? Because it's, as you know, I've as long as I've been alive, there's been 3 nuclear incidents that have occurred. And we want to make sure that the momentum is not taken away and you always want to look for the unknown. But I would say that generally is that as upbeat as everything is, and people say there's money involved, available to build out this new nuclear power, to meet the new demand. It's really about, are we going to actually be able to execute? How is it going to look really relative to what the promise is? Does that make sense?
It does make sense. Who was asking you those questions? Would you say it's more American fuel buyers? Is it the Euros? Is it Asian fuel buyers? Who's asking these questions?
It was the questions where I would say it was a mix, but it was, it was US and European, Europeans that were asking, the question when we had this conversation, principally in that area. And that's where you see a lot of the growth. With the exception of, I didn't get a chance to talk to any of the attendees from China, but I did talk to some from Japan and elsewhere, and similar conversations, but not like it was the questions and about delivering as it came from the European and North American nuclear industry.
Any of them seem worried? There's always this talk about, utility buyers or fuel buyers are going to start panicking soon enough. Any of them seem worried?
No, none of them seem worried. I think that, so it's like they're at the point of acceptance now. You know how you go through the 5 stages of grief, and now they're in acceptance. I don't think you're going to see a real panic, because they're going to pay what they have to pay. You've already seen if you follow the price of conversion right now, it's really moving high. And so they're going to pay what they have to pay to get what they need. I think that the one thing that I think I mentioned earlier that everybody questions is, what are we going to do about this gap in conversion? How are we going to solve this gap? Now, no one has any answers. And I certainly, anything I would do would be pure speculation. But the reality is that's the crimp point, and people believe that it needs to be solved. I don't think it's going to be as negative as some folks are talking about. I think the supply of conversion is going to be there. You're just going to have to pay a higher price for it, and we need the conversion so we can get the demand for the feed, the uranium. But I think that no one's I couldn't sense anybody panicking from the conversation we had at all. But I do see a sense of urgency, if that makes any sense. There's a sense of urgency to start going out and starting securing supply ahead of time. And also, don't forget that what's also driving the sense of urgency is the news out of Kazakhstan. That didn't seem to move the market much or anything like that, but it's a real thing that people are talking about under their breath. They're not talking about it up on a dais or anything like that, but you get around the coffee pots and particularly once you get up there and have a nice adult beverage in your hand, the talk always seems to go back towards Kazakhstan and what's really going on there. Simply because the news keeps shifting, and what that, because you may recall is that Kazakhstan's always seemed to be the low cost provider, but now with all the changes there and as well as the supply chain issues that they've shown, that they have with getting in the market, how reliable of a long-term supplier they're going to be to the Western markets. And that was a conversation we had multiple times.
Last question before I let you go, Paul, because I know you have to go. What's Paul Goranson's favorite adult beverage?
Well, they have a nice Czechoslovakian Pilsner here at the bar here. It's called Prava. And I was enjoying that one very much. Not a lot, trust me, keep my head above water, but it made for, after a long day of conversations and going from meeting to meeting to meeting, it made a good decompression moment.
I had to be there. Hopefully I'll be there next year, and hopefully we have really hopefully we'll have better stocks by then. But thank you so much for doing this, Paul. I really appreciate your time.
You bet. Have a good one.
All right, James, you're calling in from London as well. From the WNA, well, I suppose the WNA is done now, but what is you're calling right after what has been a very bad week for the uranium markets, for markets in general. So I understood from the rest that the uranium thesis is still bullish on the floor, although that's obviously not reflected in the share prices, yours and other uranium stocks included. So how's that combination affecting the sentiment on the conference floor?
It's funny, I think it's the complete opposite, because there is one word that I heard used multiple times during that conference, and it's momentum. And in particular, this is the strongest momentum the nuclear industry has seen since the 60s, 70s, 80s, which is very compelling. And they made great points to back up that word and that sentiment, just with the amount of governments who are turning new leaves, who have done 180s on nuclear energy, more build outs, the Chinese rolling out nuclear plants faster than anybody's ever seen. It's real. Like, this momentum is real. It's happening. It's not, and the way the markets are going are not a reflection of what's happening in the nuclear and uranium space. It's completely wild.
Has there been talk about that? I mean, were there panels or something to discuss it? I know a couple of exploration companies were there. I assume you weren't the only one. So was there talks about this disconnect between the fundamentals and the market price?
There might have been, but that could have been one that I missed. I did have a couple meetings that I had to attend to and missed a few of the first day meetings or first day panel sessions.
Well, how was it for you personally though? Like, when you have those meetings, what are people asking you? And is anyone really walking up to you and saying, James, what's happening? My position is at an all-time low. And if they do, what do you tell them?
It's not really an investor conference. So I was there as a fly on the wall, first time ever at the World Nuclear Symposium. I wanted to see what it was about, but also wanted to meet with new people and just see what is available for baseload with support for down the road. But yeah, I didn't have anybody come up to me and specifically saying, hey, what's wrong with baseload, blah, blah, blah. I met with some new potential investors. So it was good for me. Just on the small basis that I went for. I wasn't expecting much, and I think I came out with just a little bit more. But also wanted to keep my feet on the ground and see what the nuclear space, what they were thinking, where their thoughts were going, where they're projecting everything to go as well. And I learned a lot. I think it was great.
Well, that's why I wanted to find an explorer to talk to as well, of the ones who did go. Why? Because it's not an investment conference again. It's a nuclear conference. So why do you, as an explorer, you're not putting any pounds out of the ground right now? Why do you go to that kind of conference instead of an investor conference?
Networking and information.
Well,
it's explorers have and explorers. So an explorer without a discovery, I think, is one thing. But since we have Accio, and we do believe that we can pull pounds out of the ground, we do have that forward-looking vision, and it makes sense for us to try to find a home for pounds in the ground.
So has your visit changed anything in the way you're gonna approach baseload going forward, and not baseload only, like the exploration side of things? We talked about it 2 or 3 weeks ago. You told me you have these things figured out, but I'm talking about the share price. Has it changed anything in your perception as to how you should approach the issue of again, the falling share price?
Not really, no. No, as we discussed last time, our path stays pretty straightforward.
So it's not like it's not someone walked up to you, and that's how I imagine it, because I know there's producers on there. I talked to Paul Goranson as well of Encore Energy. No one's walked up to you and said like, hey, Baselode, or hey, James, I know you're struggling, let me take 75% off of Accio and we do a JV on it.
No.
Okay.
No, correct.
Yeah.
No, so nothing's changed for us. And I think one of the things is it would be a different scenario for us if we had official pounds in the ground. That's something that we could market and people could understand and bring to it. But as it is, we've just got drill holes in the ground without any more meat on the stick to bring to people.
So, but well, basically, then next year should be better for you. You're planning on going back?
I'm considering it, yes.
Okay.
But especially next year with the supply demand numbers, I think that'll be a little bit more intuitive, but I know what it's going to be. It's going to be supply demand imbalance, and there's just going to be more cry for uranium down the road. It's the obvious truth.
Yeah. Yeah, especially for you, if you manage to get the MRE done this year, that might change some stuff, or at least that's the hope, I suppose. From your perspective, sitting in on these presentations, what was important? What do you think was your biggest takeaway?
The momentum, just understanding how much real credibility there is to that word, and just hearing a lot of the efforts that are being put in place, not just from North American standard, but just globally. It's very impressive to hear what is going on with a lot of areas. I think one of the examples I liked the most was from one of the Swedish ministers, where he mentioned back in the 70s, Sweden had one of the worst economies, or not worse, but they had their economy wasn't as strong as it is now, and it was pretty poor, but they were still able to roll out a nuclear plant per million people within 10 years. And if they could do it back then, why can't countries do that now? I think that was the very interesting take, but also hearing the difference between China and the rest of the world on nuclear buildouts. And with somebody mentioning that China's first reactor that they put in recently costs a lot, but because of their 5-year plan, their multi-year plan, they've strategized, and financing was a part of that strategy, in that the more build outs they complete, the better and more efficient they become at these builds, and your costs actually decrease. And that's a legitimate thing that they're seeing. So on a per watt basis, it's not the cost of one reactor, which I think a lot of people say, oh, the reactor costs are so high, they're so high. Yeah, but if you can roll them out into a sequence of build outs, then those costs do get reduced. And that's been demonstrated in China. And I think that's one of the things that the nuclear industry has to get right, is just that message right there. And that was brought up as well, especially stateside, that something like that information has to fit a plan for the nuclear industry moving forward. That it's not just cost. I think a lot of the talks were also very open about nuclear is not out to replace solar or renewables or anything like that. It's got its place in the market, but it's a very strong and important place as that backbone power system to everything else. And I think governments are definitely realizing that too, which is why we're seeing more nuclear buildouts.
It's only left to the market to realize that too. That'd also be appreciated. Where do you see Baselode in the next 12 months? But between now and the next conference that's coming, you want to do an MRI. That's what goal number one. What else happens in the meantime? You have enough money to cover it? Are you going to keep something in treasury for rainy days? Talk to me about generally how do you see the next 12 months?
Well, the next 12 months will be rolling as we normally do. The MRE, yeah, we've got pitch and hold for that, sufficient funds for that. We've got 5 million in the bank for exploration next year, so we'll continue to explore. Once we're done drilling Accio and Hook this year, we'll have a better understanding of which targets we want to focus on with those funds, including Accio. So I think it's going to be another normal year for Baselode, but to be forward looking and to be very optimistic, I do think that with some of the targets we've seen already, we've got really decent chance for making that other discovery we've been looking for. So having the money in the bank for that already is a big bonus for us.
Would you consider selling selling one of the non-core assets, or again, I mentioned a JV there, but hang on, how much money do you have in the bank right now? Again,
as of the Q2 financials, we have 15 million in the bank as of June 30th. With the exploration we're doing at Hook, we're basically burning 2 million a month.
Okay.
With 2 drills on the go. So by the time we're done, we should have between 8-9 million left.
Oh, okay. So, well, you don't have to. We talked about that last time. Again, you don't have to raise money, but you also don't necessarily have to consider selling one of the other projects or getting an option in, or even, equity, not equity, but asset level dilution. That's not something you have to consider in the next 12 months.
No, not at all. No.
Okay, fair. What about there was a comment last time under our interview, and I know I've asked you that before, but fair enough, let's repeat it. Not everyone watches all the videos. Over the next 12 months, you're also working with another company, a nickel exploration company. How much of your time over the next 12 months do you think goes to Baselode versus how much it goes to the other company?
Very minimal.
Okay.
No, Baselode's my 99.9% focus.
Okay. Yeah.
Baselode gets all of my working hours and then some. Whereas I do anything else on a personal basis, I do on weekends.
Okay. So why not consider or look for, I suppose, a different CEO of Merge?
We are. We are looking for a different CEO for Merge. Okay. Just got to find the right person, which is very hard in these markets and in the nickel space as it is.
That's it, James. What am I forgetting to ask you of the WNA? Anything else that you think we should be talking about the conference or about the company here?
No, I don't think so. I think it was a very good conference. It was well attended. Apparently, they had 750 delegates, which is quite a big number. It looked packed. It looked like a lot of seats were all filled up, and like I said, the feeling there was very positive, extremely positive. But I haven't been to previous ones to gauge. But knowing this market, not knowing the market, but knowing the nuclear space, yeah, I felt that energy, and it felt very positive. And there were a lot of happy people there. Nobody was grumbling about prices of uranium or anything. Everything seemed to be very fine, with a lot of people looking forward to the future.
Good. Well, James, thank you so much for this last minute call. I really appreciate you investing your time in me.
No worries. Thanks, Antonio. Always a pleasure.
All right, well, that's it for the WNA recap. Again, by far not an extensive summary. Unfortunately, I couldn't be there this year, so revert to the comments and let me know, like, if you were there or if you heard something that I or the guests mentioned here. If I fail to ask something that you think is important, or if you think I'm ugly and I have a stupid voice, whatever's on your heart, no matter how high the emotions, let me know below. And thank you so much for watching.